What's up, everybody? Welcome back. Lindsay, how are you? How you feeling?
I'm good, thank you. How are you?
Good. A little slow this week, but I appreciate you being here. I'm glad that we're able to crank out these videos since the markets are moving, as they always do, but not our market, not our trade. So we're kind of waiting. We're the zebra, or excuse me, we're the cheetah waiting for the zebra to pass by so we can pounce, so to speak. But that gives us, like I said, a good opportunity to get some videos done, get some content out for the YouTube family, for the podcast, everything like that. So we both decided yesterday and the day before that we were going to post on our Instagram stories to see if we could gather some questions from the people that follow us, from the guys that are looking to learn from our experience. And today we're going to cover a couple of those for you guys watching and listening. So we're going to start talking about timeframes and how we use multiple timeframes for analysis and entry. Then we're going to move into talking about filtering out the good and the bad, filtering out trades, and give you guys a couple of tactics. I want you to actually leave the video with something tangible so you can go apply it into your trading later today or tomorrow or whatever, that you can start using that to help avoid bad trades too. And then we'll kind of round back out with some overconfidence questions, because some people have seen the success that you've had, Lindsay, and they want to know how you're keeping it in check. So maybe we'll kind of backtrack there. But to start us off, you want to kind of give everybody, I think if you go first, then I'll go, just give everybody like an idea of how you use the 15-minute, the 1 hour, the 4 hour, the daily, on a daily basis. How does that fit into your analysis?
So for me, when I do my analysis, I've always done it top-down analysis. So I've always started at the daily. And this is when I was obviously just doing price action and working my way down, filtering that to the 4 hour to find the trend, to the 1 hour, and then I always executed on the 15. So that was where I kind of ended. But now that I'm in with ASFX, I'm obviously still executing on the 15-minute, but I have indicators that I need to know are going to be in my favour as well. So I'm kind of using the 15-minute first to make sure I've got everything on point on the 15-minute, to then go to the higher time frames to bring it in with confluence to my idea on the 15-minute.
That's a perfect way to say it, like that word confluence, because that's what it does. And I think the way you explain that is so important for everybody listening, like, because I couldn't say it any better. The 15-minute for our system, and every system is different, but the 15-minute chart where each bar is 15 minutes, that's where we built our testing. That's where, more importantly, we find our trigger point. And if you listen to my interview with Tom Basso from a couple of weeks ago, he talks about that, how every strategy, every system has to have a trigger point, an entry point. So it's, I think, smart for us to start on the time frame where you're going to get your entry and then work backwards to see, does everything else fit? Because if you can control yourself to not get in the trade if everything else doesn't fit, then that's a great position to be in. You know the entry is already there. You get all the other probabilities on your side, and then you're actually feeling really confident about that trade. Do you ever find that you get caught up on the higher time frames though? Like, if the 4 hour doesn't agree with the daily, or the 1 hour doesn't agree with the 4 hour and the daily, what do you do in those situations?
I think, to be honest, I more now go on my EMAs a lot for the overall trend of the higher time frames. And
which EMA is more important?
I'm still with the 50, the 21 and the 8 on the higher time frames, and even drilling it down to the 21 and the 8 on like the daily especially.
So you're taking out the higher EMAs to make it cleaner.
But I still do, if price action is on an EMA, I'm still, obviously I have to take note of that, because I know it can maybe come down, trigger down to the 15-minute to make it more choppy. And there'll be other things within the 15-minute that are probably going to be divergence there. There's going to be other factors that I can read.
Well, do you ever find that there's a setup where the higher time frames aren't that clean, but on the 15-minute there is a clean entry? So what do you do then? Do you ignore the higher time frames, or do you size down in the trade because of the higher time frames? What's your thought process then?
Because there was actually one, I think it was actually this week, with a perfect liquid 50.
That's what I'm thinking about. Same
there
trade.
Was, and and it was, I've got it noted on my chart. I'm just can't remember the pair now, that the 21 on the daily was right there. And I just took note that there was a perfect liquid 50, there was divergence in my way, and I thought this is going to chop, and that's exactly what it did. It did move lower, but it chopped its way lower. So it wasn't really a trade I was wanting to be in.
So what about a situation where, like yesterday, I think it was, we were looking at one of the GBP pairs, and the short idea was 15-minute time frame, really, really good. But the 1 hour had that 800 EMA in the way. Are you ignoring that 800? Or
no, not on the 1 hour. I don't.
Not on the 1 hour. Okay.
I really like my 1 hour and my 15 minutes to kind of mirror each other.
Got it. And then the 4 hour and the daily separate.
Yeah.
Interesting.
Yeah.
Okay. I like that. That makes some sense to me. What do you think if you had to pick? I mean, it's kind of a silly question because you can't really pick, but is the 15-minute the most important time frame to you?
Yeah, I think with our system.
It has to be, right? Yeah, because that's where you're taking the position. Yeah. Okay. Yeah. Interesting. So let's kind of, did you have any questions that you had about timeframes, or did we cover it there? Because I got two of them.
We covered it, yeah.
Yeah, I had two that we covered there. Yeah. So let's move into another one here. I've got how to filter out bad trades when your system says go. I know you had some questions about the filtering of ideas too. So why don't we start with that word, idea? Give everybody an idea. I don't mean to say the word twice, but give everybody a picture, paint the picture of how you separate trade ideas from trades that get your money, Lindsay.
So it'll all come down to my checklist of if I go in and I've maybe got 2 to 3 things on my checklist that I don't want to risk my money on, then I will treat that as an idea to a trade that I'm going to pull the trigger on, and there may be just 1 or 2 things, depending on how big they are, that I say, okay, this is going to be worth a bit of my money, you know, for me to pull the trigger on.
So it's the checklist. It's questions.
It's a checklist.
When more things are good, and we like to say they couldn't be better, then that's where you're saying, if I can, they almost scream at you at that point, right? Because then if nothing can be better, then they're like, yo, get in the trade, put the position on.
Yeah.
What do you think makes it so difficult for new traders to separate ideas from trades?
Because I think they've picked up bad habits. And
a bit of FOMO.
The FOMO, or they have seen ideas, you know, and they've pulled the trigger on the idea and seen that they have worked. Mm-hmm. But we know that by
just because it works once,
the system longer, that we know just because it works once doesn't mean it's going to work for you every time. So I think it's about being binary in your decision of, well, would you pull the trigger on this setup every single time? And if they say no, they're not, then we know that was probably a bit of FOMO, a bit of bad habit.
100%.
You know, they're not going to pull the trigger.
For the people that are in the group that are already with us, like at ASFX, do you find, in your experience, how long you've been with us, that it's better? Because I think you have to be in one side or the other. You either have to take all the C setups or you got to avoid them.
I agree.
Do you find that it's, why do you, because I know you choose to not take the C setups. Why is that?
I remember when I first started, I took a lot of C setups.
Yep.
And it meant for me, I was having to be in a lot more trades.
A lot more management, a lot more thought, a lot more energy needs to come out of your brain, a lot more output.
Your energy is going to get more burned out.
You're already, I can see it on your face right now. You already hate it.
I've been there and I've done it.
Yeah.
And I didn't like it. So the lesson was learned for me that if I just cut my C setups out,
just don't even take.
It's not that I think there's even a difference between us. There's a good C setup that sometimes you do want to be involved in. So I can't say I want to 100% cut C setups out, because there can be a C setup that I think is worth my money.
Sure.
But I think if there's like 3 and 4 things that, you know, in the Asia range, divergence on the top, you just know the ones that through experience, and it comes through experience, the ones that it's definitely not worth your money.
Leave it as a markup. Just leave it as a markup.
Yeah,
don't even need to put money into it.
Less C setups, regardless, if we're going to keep it binary, then I just can trade 2 to 3 trades a week and still have a good month.
Right, absolutely. But that gets difficult too, because we've talked about this before. Everybody gets into trading because they want to trade. So in cutting out the C setups, you're actually trading less. But winning more. Yeah. Which is the idea of trading. You want to win, you want to grow your account, you want to make money. So it's counterproductive, counterintuitive. Then I think it just takes a lot of awareness to say, hey, if I'm going to make money in trading, I need to be aware of the fact that I probably am not going to trade as much as I thought I did when I got into this business, you know?
Yes. And I think that is definitely where it comes from, experience, because now that I have had a good 3 months under my belt, and when I look back on my results, there was hardly a C setup within that.
Right.
So why change what's working?
Right.
And just because I've sat here for like a week now without being in another trade, I'm still not really, want to say, okay, well, I'm just going to pull that trigger and that's
right. You're not going to just be willy-nilly with it. Right. Of course.
Yeah.
And I think that takes a lot of confidence, actually, which people will always say, oh, that takes patience, Lindsay, that takes patience. It does. But the patience comes from confidence in the system that, hey, if it's not here today, for me, during my time, it's going to come. Exactly. Like even the trades that we're looking at now on some of these GBP ideas, again, today, we're looking at them, we see them, we can read them. It just happened to be that the timing didn't line up. You know what I mean? So what could we do? Be mad at the market and try to force money out of it just because the timing didn't line up? You think the market cares? No, of course not.
No.
You know what I mean? Did you have anything else on the idea of filtering out good and bad trades? Anything on like the technical side? Because I was thinking about like specifically divergence and how that's helped me filter out a lot of good trades versus bad trades, especially for breakouts. When I'm trading into divergence, I find that if I can't get good risk reward to that divergence, then it's not a great trade to be involved in. Even if some of them they break through and they take, like you said earlier, you don't know which ones those are. So it's better to wait for the good risk reward and take those, but the divergence helps filter it.
Yeah, because you can see that with Euro USD right now, because there was divergence there. We kind of knew divergence, Asia range, this could just
it's coming up
around.
now. So I was a little off. I said it was going to come up, but it came down first, broke for a new low for a second, and then came up.
A second and then came, And divergence was very new to me because I had never obviously traded divergence or anything before coming to ASFX. So that has saved me a lot in taking bad trades.
Sure. So like even on Euro JPY today, where price action's falling still from the big JPY move we saw down yesterday, some of the guys are like, yo, it's at the 50 EMA. I'm getting ready for an entry. And I'm like, wait, it just broke the 50 twice. I don't see this coming lower. This could actually hold this divergence and come higher. So let's let the short ideas be ideas. And what did that do? We left it as an idea and now we're not losing money. So it's actually,
I think that's another way to filter out the bad ideas. I don't like to see the bad trades, like the bad ideas.
Bad ideas. That's the best way to say it. Yeah, because really, I do kind of like to think there's no such thing as a bad trade. Because if you're getting down to it and it fits the bill, it's just an A, B, or C. It's not really a bad trade. These are just, like you said, ideas. I love that comparison. Let's talk briefly about crypto. I had a question on mine about crypto. Do we think Bitcoin is going below 10,000 in the long term? Right now it's at 10,244. So it's up like 1% today, but just go back like 2 days ago, not even, and it was under 10,000 briefly. So it's pretty volatile. It's down off that like 12,000 number that we just hit recently. And I took some profits a couple of days ago just because on the daily time frame, the 8 and the 21 EMA crossed. So to me, my answer to this question is always the chart is where I'm going to turn to first. Fundamentally, I understand how everybody on Twitter is like, crypto is forever, Bitcoin's the future. But in reality, crypto can be the future. And you saw I said this, crypto can be the future, but not Bitcoin. Bitcoin might not be the future. We don't know. And when the chart shows us that the 8 and 21 EMA cross, well, they could stay crossed and it could hold the 8 EMA and come lower and lower, just like it did when it popped to 20,000. For all the people that bought when it hit that initial pop, if you would have gotten out when the 8 and 21, it was around 17, 16,000, not at the top, but still way higher than the people that bought at 10, 11, 12,000. They still all made money if you just followed the technicals. But what do you think about Bitcoin? Do you think it's going to go down? Do you think it's going to go up?
Very much because I really don't trade anything else apart from Forex. I really have to stick to the technicals because I don't know enough about it fundamentally.
The fundamentals, right. I don't know blockchain. I don't know any of that crap.
I don't know anything like that. And I'm just being honest because I've never looked into it. I'm very much just Forex focused. So for me, if I'm looking at a chart like that, I would just have to use technicals.
Yep. And I feel like that's the way to go. Like throughout history, what can we look at to see? Even look at gold. We've seen gold. Beautiful pennant breakout formations, pennant flag, bullish pennant, bullish flag, over and over in a pattern almost. So the breakouts are very clear to read, and that would tell you then the breakdowns are probably very clear to read if you're open-minded. It gets hard to embrace the 8 and 21 cross down if you're like a hardcore Bitcoiner for life. You know what I mean? If you really love it, it's going to be like, oh man, I think the 8 and 21, they'll cross right back up. No, bro, they might not. Like it can cross and just go, you know what I mean? So just like it could cross and go up. So you see both sides of it. But I think the best way to look at crypto for me is like, it is not an investment. It's still speculation. There's still no regulatory agency really overseeing what's going on. There's still no safe broker really to trade it with. it's still something that's just so new. It's hard to kind of like keep tabs on, so to speak. So let's say you rack up 2, 3, 4, 5, 600 grand. What if you can't get the money out just because you're with some broker that's not legitimate? They don't even have the money to pay you. You know what I'm saying? It's like a video game almost. So it's not really worth my time.
No.
The only value I see, if any, is to just get some Bitcoin and hold it, and just hold it for the long term. But even now, look at me. I took profits because I know what trading does. Like I know what the chart tells me. I can always buy more. You know, that's the way I look at it too.
Absolutely.
Yeah. 100K seems crazy, right? If it's at 10,000 now, if it gets to 100K, it's going to take so long to get there in my mind. Like so many other things will happen. You know what I mean? There'll be so many other ways to make money while that happens. I just don't think you need to go that route. But who knows? If it's for some people, it's for some people.
Exactly.
Yeah. So this is my last question, unless you have any more. My last one was how to go into every day after a winning streak and not be overconfident. Why don't you start with that one? Give us some tips. How do you stay grounded? How do you stay? Tell them it's that relaxation mat you just bought. That new spiky thing you lay on to relax. That's how you chill out.
Do you know what? I love it.
They're amazing.
Yeah, they are
I gotta
amazing,
get one.
but they're so sore when you go on it. And obviously Gordon had used it first and he's like, Lindsay, you just need to give it 4 minutes at this level and then 4 minutes at the burning level, like sunburn level. And then honestly, you just feel your whole body, your muscles sink. Just sink.
Wow.
So, and I know another girl, actually, she's a runner who does it. Yeah. And she actually stands on it and uses it on her feet. And she says it's coming up through her body.
Wow. Interesting.
Yeah.
We're talking about this like yoga mat with spikes on the bottom. You got it off Amazon, right, Lindsay?
Easy. I think it's like something like Easy Relief or something it's called.
Yeah. But
they're not dear. They're not dear. They're like, for me, £20 or something like that.
Yeah.
Off Amazon. They're not, but they're really worth it. I think if you want to keep kind of mentally there and your mind relaxed, especially going to bed. My hubby, he's in sales, so he likes to kind of try and go back down. So he's been using it for before bed, and really
that's awesome.
He sleeps really improving.
So what else are you doing to stay grounded and not get overconfident?
I think for me, I've spoken this before, and it's really just about focus. I take day by day. I don't focus the long term. You know, I just take it day by day, and I know I've got a plan. I know I've got an edge in my rules, and I just focus on sticking to that every single day, being confident, you know, being disciplined and following that. And if I come to each day and I can see I've done that and it was good, then I move on to the next day and I just repeat the process.
Process focused.
Yeah. And then you know, you do your end of the week review, and you just take it day by day, week by week, month by month, and I don't really think away ahead, because I think if I think away ahead, that's when I'm going to skip and jump
100%.
and not stick to plans. I'm getting a bit excited with my goals and things like that. So I've got to kind of stay grounded by, regardless of the outcome of yesterday. If I had a really good trade, I don't know what the market's going to do tomorrow. So I have to stick to my plan and just do what I continue to do and be disciplined.
It sounds like you stay grounded in the routine that's in front of you on a daily basis, even though you don't care about the daily result. You care about the bigger picture result, and that's really the only thing bigger picture you care about, because bigger picture, you're not looking at any goals, because that could hold you back, and you know that.
I think when I first came into trading, I was very much driven by the outcome of that one trade, and I think that's just being human. And I think that's a lot of pressure on yourself, and
100%.
It can get you in a bad rut, because you're chasing that outcome of that next trade, and not looking at the overall picture. So now that I have, that may have come from not having confidence in my previous way of trading, I'm not too sure. But now that I have truly found an edge and I know what's working for me, I know all I have to do is follow the plan and the rules, and if I stay disciplined enough, I'm going to get results.
Yep, I love it. Did you have any other questions that we didn't cover through what we talked about already?
I just had the one about our morning routine, and
that's what I thought. So let's go into that, because that kind of ties into what you were just saying. So what do you, because we are in 2 different time zones, tell us what you're doing, because I actually don't even know what you're doing from when you wake up to when you get to the charts. Like, how does your morning go?
So for me, I very much now have kind of tried to stay off social media until I basically get to the trading desk.
Yeah.
And just not focus and just be switched off, because then I know if I'm switched off, I'm more calmer.
Yeah.
Because obviously my morning's quite busy, being a full-time mum at home. I'm trying to get kids out to school and get organised.
Right.
But once I know that's done and all my kind of home life is done, then I can come to the trading desk with a clear head of my day in front of me. So I don't do, because I don't have time to do any, I'm not saying I don't have time, that's just like an excuse, but I don't do any exercises. Like I don't do my yoga first thing in the morning. I know I do it later. As long as I don't come on social media, I'm good.
Interesting.
And then I just have my normal day morning. Then I know I'm coming to the charts with a fresh head. I'm calm. Everything's done, and all I'm focused on is my trading.
What time do you stop trading?
I stop trading, well, depending on if I get a setup. So if I don't get a setup and I'm in between, I will finish totally everything by 2:30 in the day.
Got it.
For me, so that's
very similar to me. Yeah. Very similar to me. Because like for me, I'm that's right around the time that I like to stop trading. Unless I'm in a trade, I'm just managing it from there. I found that like doing my meditation stuff in the morning, the 10 minutes, that's definitely made a big impact on me. Just because it's like when I wake up, it could be the caffeine. It could be because I do go on social media pretty quickly and I'm checking the group chat, and I don't like that, but I want to make sure everybody's questions are answered and everything's okay. So I go to that, and I think that and the caffeine are not a good combination to then come and make trading decisions from. So the meditation definitely is like a nice little space for me to be like, okay, just slow down for a second. Where are you? Live in this moment. That stuff doesn't matter. And then it actually kind of makes me feel like caffeine more. Like it's weird what like slowing down can do for me to then help my decisions going forward. So I feel like waking up, going right to your phone is a terrible idea. But if you're going to do it like me, at least try to balance it with some space between you and the important decisions that you have to make. For me, the important decisions being my trading. So the days where I'm not meditating, I feel rushed. I do feel kind of like, not out of whack, but just not as paced. Pace is the best word. Like I have pace. You know what I mean?
I now have, like, for me, dropping the kids off at school and coming home, I have like kind of a 20-minute bit in there that I can just feel like, well, I come back down to ground level, and I'm still not on social media or really in the chats until I know, like, I've really been in my charts and I've seen.
And you're ready to go. You already have your watch list done.
Yeah, I very much, because people say, you know, like what you said in the group chat, Lindsay's not here, she's pretty much a silent trader, but I like to be like that, to be focused. On
your own, well, because then look, you make your watch list and then you come into the trades, and then no one in the group chat is going to sway you or make you think something else. You already know what you're looking for that day. You know what I'm saying? So I feel like, it's much better that way. And we both know, we've been saying this for a while, as people get better at trading, they get less active on social media. They get less active in the group chat. I enjoy, just like you do, coaching and helping people. And even me, I'm less active now than I ever was. But I also work smarter than I did before. And I think you do too. We plan out our posts a little bit different. We plan out how many videos are going to come out ahead of time so we can be off and unplugged, because we are making more money now than ever before from trading. So you still want to get out. You know what I mean? And I think that you have to keep that in mind too. I definitely
think that's what it comes down to, your planning, and, you know, it's just working wiser.
But the routine, the routine comes down to, you can plan, work wiser, but if you're not, like, if you don't have that structure through routine, I feel like too, it's difficult to stay consistent. So the repetitiveness and what you do, like the structure, has to be easy to follow, just like a trading plan. You know what I mean?
On the individual as well, depending on, you know,
100%.
where they're at mindset wise. 100%. If you wake up and you don't feel that you're grounded or you're calm or anything, you're going to have to do meditation or something before coming to the
Some guys go and work out before they trade. That'd be awesome. Like, I'd love to do that. I just can't, because it's too early for me. You know what I'm saying? But I would love to do that. So I think everybody and it also depends on the time zone that you're in and stuff like that. But the most important piece, I think, about the routine is keeping your trading hours. Like, knowing I'm going to be here every day from this time to this time. This is what I'm going to do. I'm going to look for ideas, generate ideas, see if I can find a trade, and then I'm going to be done. And I'm going to stop, and I'm going to separate from it. And if you do that consistently, you're operating a business then. You're not just treating it like a hobby, hop on, find a trade, some days, not some days. No, it's got to be every day, same hours, like a business. You know what I mean? For sure.
Absolutely.
Yeah, 100%. No, so this is good. I think we covered a good amount of questions here. I think that everybody will appreciate us taking the time to go through and individually answer what they posted for us on Instagram. If you guys listening or watching have any other questions or want us to go deeper into any of the topics that we discussed today, just comment below, DM us, let us know whatever you guys need. We're going to continue to crank out the videos and keep the content coming. So, Lindsay, thank you always. I think this was really good. Yeah, always. Of course. This is good stuff. So YouTube community, Spotify, iTunes, wherever you're listening, watching, we appreciate you guys, and we'll see you in the next video.